the next concept we have depreciation. So depreciation is the decline in the value of asset on account of wear and tear and passage of time. It is treated as a business expense and is debited to profit and loss account. This in effect amounts to writing off a portion of the cost of an asset which has been used in the business for the purpose of earning profits. So here depreciation is nothing but a decline or a decrease in the value of asset. So why? Because the asset has been used continuously in the business, and because of wear and tear and passage of time, that particular asset value has to be reduced. So that reduction what we have, that will be considered as depreciation, which is non-cash expense. So that particular expense will be considered in the debit side of profit and loss account, and the same value will be reduced in the balance sheet from the particular asset. So here let us assume depreciation will be charged at the rate of 10% on furniture. So here for this depreciation, from previous sessions we have done a trial balance and we have done a trading and profit and loss account and balance sheet of Ankit. We will continue with the same example. Everything remains the same, only the adjustment what we are going to discuss, that will be altered here. For example, we are taking depreciation here, we are going to show only depreciation, and because of that depreciation the profit will be changed and that profit will be appearing in the balance sheet. Then again the particular depreciation what we have to deduct from the furniture, that will be deducted from balance sheet and the total will be tallied. So here when coming to the trading and profit and loss account of Ankit, so when coming to the trading and profit and loss account, depreciation will not be charged in the trading and profit and loss account. So we can have a look here. When coming to the trading and profit and loss account, what we have prepared, everything remains the same, where the gross profit we have is 56,500. Now coming to the profit and loss account, the same gross profit was brought down in the credit side, 56,500. Then again here everything remains the same, only thing we are going to add in the debit side is depreciation on furniture at the rate of 10%. So here the entry will be in the debit side, depreciation on furniture. So where the depreciation will be calculated at 10%, where it is 15,000 into 10 divided by 100, which will be coming to 1,500. So here debit side we have considered 1,500. So now when we calculate net profit, there will be reduction in profit by amount 1,500, because 1,500 depreciation we have considered in the debit side, where our expenses are increasing and income will be reduced. Now let us have a look on the profit, where the profit will become 24,000. So you can see in the previous session we had profit of 25,500, but here because of adding of the depreciation, the profit became 24,000 here, and the same will be appeared in the balance sheet. Now coming to the balance sheet of Ankit here, already which we have prepared, all the entries will remain same, only 1,500 we are going to deduct from the depreciation, and coming to the net profit what we have, we are going to add to the capital. So coming to the asset side, furniture we had 15,000. So now furniture will be considered in the debit asset side itself. Furniture 15,000 in the inner column, less depreciation 1,500, then outer column 13,500, and same 1,500 will be reduced in the liability side. So directly the net profit amount what we are going to take, from that 1,500 is already reduced. So capital we had 12,000, add net profit 24,000, and the outer column will be 36,000, and the total of the balance sheet will be equal for both the side. So after considering the depreciation in the asset side and net profit in the liability side, then we have to tally the balance sheet, where the total will be for both the side 59,500 for liabilities and same for assets 59,500. Now next concept we have is bad debts. Bad debts refers to the amount that the firm has not been able to realize from its debtors. It is regarded as a loss and is termed as bad debt. So now, when coming to trading and profit and loss account, we can have a look here. We are not going to change anything in the profit trading account. Everything remains the same, where gross profit was 56,500 in the previous example, and even here the gross profit will remain same. Only changes will be happen in the profit and loss account, because bad debts will be occurred in the debit side of profit and loss account. When coming to profit and loss account, we can see in the debit side already we have bad debts which is valuing 4,500. Then again in the adjustment we have assumed that one of the debtor of the Ankit who is supposed to pay 2,500, he has become insolvent. So that particular amount we are not receiving now. So what bad debts we have in the profit and loss account, that bad debts will be increased with the value of 2,500. So when coming to the debit side of profit and loss account, bad debts we had 4,500. To that we are going to add further bad debts 2,500. Then outer column will be 7,000. So because of increase in the loss or because of increase in bad debts, the profit what we had, that will be reduced. So here the net profit will become 21,500. The same will be added to the capital, and 2,500 what bad debts we have, that will be deducted from the debtors in the asset side. So now coming to the balance sheet, we can see in the asset side, so debtors we had 15,500. So from that we are going to reduce the further bad debts, which is 2,500. So here when coming to the asset side, debtors 15,500 less further bad debts 2,500, then outer column will become 13,000. After deducting the bad debts from debtors, the same value will be changing the profit of the organization. So when coming to the capital fund, which we had 12,000, so here the profit will be added is 21,500. So the outer column will be 33,500. Then the total of the balance sheet will become 57,000 for liabilities and 57,000 for assets. Now next adjustment we have is provision for bad debts and doubtful debts. In the above balance sheet, debtors now appear at rupees 13,000, which is their estimated realizable value during next year. It is quite possible that the whole value of this amount may not be realized in future. However, it is not possible to accurately know that the amount of such bad debts. Hence, we make a reasonable estimate of such loss and provide the same. Such provision is called provision for bad debts and is created by debiting profit and loss account. Provision for doubtful debts is also known as a deduction from the debtors on the asset side of the balance sheet. So here provision for doubtful debts is nothing but what debtors value we have in the balance sheet. So when coming to the balance sheet, currently we have 13,000. So here Ankit is supposed to receive 13,000 from his debtors. So now we cannot assume that the entire 13,000 will be received. So what happens here, we will make a reasonable provision that from that particular amount we will not receive so and so percentage, and that particular percentage will be reduced to find out the accurate profit for the financial year. So here let us assume Ankit feels that 5% of his debtors on March 31st, 2005 are likely to be default on their payments next year. This implies his accept bad debts of rupees 650. So here we are charging 5% provision for debtors on a value of total debtors, which is 13,000. The same we are going to record in the profit and loss account in the debit side, and the same will be deducted in the balance sheet from assets. So we can see again here, when coming to the trading account, we are not going to change any value here because bad debts is a loss and it is a indirect loss which will be recorded in the profit and loss account. 4,500 plus further bad debts 2,500, where the total was 7,000. And provision for bad debts will be shown separately in the debit side. Provision for doubtful debts 650, which is 5% on the total debtors, which is 13,000. 36,000. So same will be affecting the profit of the organization. So where the net profit will become 20,850. And the same we are going to record in the balance sheet. So when coming to the profit, the capital was 12,000 and the profit will be added 20,850. Then the outer column will become 32,850, where the debtors were in the asset side, where debtors was 13,000. Then again from debtors we are going to reduce 650. So here debtors 13,000 less provision for doubtful debts 650, then outer column will be 12,350. So the total debtors now it was the 12,350. Then the total of the balance sheet will be for the liabilities side 56,350 and for the asset side 56,350.